guys, in this session we are going to be solving the RTP applicable for May 2023 CA Inter Income Tax. This session is going to be all about the MCQs. There are around 8 MCQs in this RTP. Good ones. A lot of concepts will get revised through this discussion. Let us start off with the very first question. The first question is a case study based MCQ. So what I'll do is, to make things a little easier for us, before I read the question, before we start solving the question, let us first revise the concepts which are involved in the question. So let me give you a small revision of the concepts involved so that with a lot of clarity we can read the question. Alright, now I want to discuss with you first of all about section 206C1. This question, the first case study based MCQ is all about TDS and TCS. So first of all, I'm discussing with you about section 206C1. Now here we have two people in our story. We have the seller and we have the buyer. Now who is the seller? Either the seller may be an individual or a HUF, or the seller may be any other person, right? If the seller is individual or HUF, I am covering only those individuals and HUFs whose preceding previous year turnover was more than 1 crore or preceding previous year gross receipt was more than 50 lakhs. Understanding? So under 206C1, I'm not covering every individual or HUF. I'm covering only those individuals and HUFs who fulfill this condition. If you're not an individual or HUF, if you're any other person, like if you're a company, firm, LLP, AOP and all, then I don't bother about your turnover and gross receipts. So if you are an individual or HUF, this condition should be fulfilled, or you should be any other person. Now this seller is selling goods to the buyer. What kind of goods? The hint to remember what kind of goods is atoms. Now what does atoms stand for? A stands for alcoholic liquor for human consumption. T stands for tendu leaves. Then another T stands for timber. Then O stands for other forest produce. Then we have M which stands for minerals. Okay, minerals like coal, iron ore, lignite. And finally we have S important. S is for scrap. So totally 3 conditions, guys. The first condition, the seller should be a person who, if individual or HUF, his preceding previous year turnover and gross receipt numbers should be fulfilled, or he should be any other person. Now listen, the same criteria you must have seen in so many other sections also. We generally call them the hijack sections. Section 194H, 194I, 194J, 194A, 194C. Even in these sections, you have seen the same criteria that if it's individual or HUF, then preceding previous year turnover should be more than 1 crore, preceding previous year gross receipt should be more than 50 lakhs. So this will not sound like a new adjustment for you, because this is something which is there in 5 TDS sections also, 194HI, JAC. Anyways, coming back to 206C1. So under 206C1, condition number 1, either the seller will be individual or HUF, or he will be any other person. If the seller is individual or HUF, we are covering only those individuals and HUFs whose preceding previous year turnover was more than 1 crore or preceding previous year gross receipt was more than 50 lakhs. Condition number 2, what kind of goods are being sold? Atoms, where A stands for alcoholic liquor for human consumption, T stands for tendu leaves, another T stands for timber, O stands for other forest produce, M stands for minerals like iron ore, lignite and coal, and we have S which stands for scrap. Now what is the TCS rate? The TCS rate depends upon what kind of goods. Like for example, for tendu leaves, it's going to be 5%. Okay, for timber 2.5%, for other forest produce 2.5%. Remember these 3. Everything else is 1%. Okay, so tendu leaves 5%, timber and other forest produce 2.5%, everything else 1%. Now listen, the story doesn't end over here. We have one more section, section 206C1A. 206C1A says, if the buyer is a person who is going to use these goods for manufacturing work, he is going to use these goods for processing, or he's going to use these goods to generate power, In simple words, he is not going to resell these goods. He is not going to trade in these goods. He is going to consume these goods in his manufacturing work, in his processing work, in generation of power. If the buyer is such kind of a buyer, the buyer can give a declaration to the seller saying that he is not going to resell the goods. He is not going to trade in the goods. He is only going to reuse the goods. He is going to consume the goods in the manufacture or processing or generation of power. If he gives such a declaration, then no TCS at all. Guys, I'm saying no TCS at all, which means not only under this section, under any other section also, no TCS at all. Are you understanding this? Yes, so if he's giving this declaration, then no TCS at all. In that case, the seller will not collect tax. Alright, so now listen, totally 3 conditions I was telling you. 2061, condition number 1, the seller, if individual or HUF, should fulfill this criteria, or the seller be any other person. Second condition, the goods should be atoms, that is one of these 6 goods. Third condition, this declaration should not be there. Because if this declaration is there, then no TCS at all. So the buyer should not have given this declaration. That is, in simple words, to conclude, the buyer should be somebody who is going to resell the goods. The buyer should be somebody who is going to trade in the goods. Because if the buyer is not going to resell, if he's not going to trade in these goods, instead, if he's going to use these goods for manufacturing, processing, generating power and all, then he'll give this declaration. And if he gives this declaration, no TCS at all. So we don't want that. So this declaration should not be there, because if he gives this declaration, then no TCS. You're understanding? If he gives this declaration, then no TCS. So that is why he shouldn't have given this declaration itself. Because if he gave this declaration, then 2061 will not apply. If he had given this declaration, then no TCS at all. When will he give this declaration? He'll give this declaration if he's not going to resell these goods, if he's not going to be a trader in these goods, he's going to use these goods for manufacturing work, processing work, or to generate power, then he will give this declaration. And if he gives this declaration, then no TCS. Okay, I'll give you a hint to help you remember this. See, in 2061, the buyer should be a trader. The buyer should not be a manufacturer. He should be a trader. He should be a person who buys goods and sells the goods. Then you collect tax. Then the seller will collect tax from the buyer under 2061. Okay, so if these conditions are fulfilled, the buyer will anyways be paying consideration for the goods, guys. Along with the consideration, the buyer will pay TCS also. So the seller is going to become the collector of tax. You are already aware of this provision. I've just given you a sort of a revision. Alright. So under 2061, 3 conditions. Condition number 1, the seller, if individual or HUF, should fulfill this criteria, or the seller should be any other person. Second condition, the goods should be atoms. The third condition, the buyer should not have given a declaration. That is, the buyer should be a seller or trader of the goods. This was the first learning I wanted to give you, 2061. The second section I want to discuss with you, which will help us solve this question, is section 206C1C. 206C1C applies when there's either a lease or a license. Lease or license of what? Of totally 4 things. Number 1, parking lot. Number 2, some toll plaza. Number 3, some mine, any kind of a mine. And number 4, quarry. If I'm going to take any of these on lease, I'll have to pay lease rent. So along with the lease rent, I'll also have to pay TCS. Understanding, guys? If I am taking any of these on lease, any of these 4, if I'm taking on lease, then I'll have to pay rent for this lease, guys. So along with the rent, I will pay TCS also, TCS at the rate of 2%. Like for example, let us say the central government is giving me a mine on lease. Okay, so now I will have to pay lease rent for this mine to the central government, guys. Along with the lease rent, I will also pay to the central government's TCS at the rate of 2%. So the government will become the collector of tax. So whoever is giving me the parking or the toll plaza or the mine or the quarry, whoever is giving it to me on lease, I have to give that person lease rent. Along with the lease rent, I will also give him TCS at the rate of 2%. Okay, 206C1, are you clear with the rates? Here the rates were For Tendu leaves 5%, timber 2.5%, other forest produce 2.5%, everything else 1%. 206C, 1C, which talks about lease of parking lot, toll plaza, mine and quarry, TCS rate is 2%. Okay, now listen to my next discussion. After this, the next section in front of us is section 206C1H. Let me discuss that also with you over here. 206C1H. Generally, what happens is students have a lot of negativity around this section. There's unnecessary fear around this section. It's actually a very simple section. I'll explain it to you. Listen to me. 206C1H. What is happening over here? We have a list of conditions to be to remember over here. We'll go one by one. Point number 1. Who is the seller over here? See, the seller can be any person. The seller can be an individual, he can be a HUF, he can be a company, seller can be a firm, LLP, can be any person who, whatever kind of person the seller is, preceding previous year turnover should be more than 10 crore. Okay, here in 206C1, we said seller if individual or HUF, we had all this drama. Here we don't care whether individual HUF, whether company firm, whether LLP, whether AOP, BOI, any kind of a person, the preceding previous year turnover should be more than 10 crore, only then 206C1H will apply. Okay, then the buyer should not be a person whose entire income is exempt. The buyer should be a person who has at least some taxable income. His entire income should not be exempt. Then, if any other TDS section is applicable, then you forget about 206C1H. If any other TCS section is applicable, then also you forget about 206C1H. Understanding? In simple words, 206C1H is a very subservient section. You apply everything else, then you come here. No other TDS is applicable, no other TCS is applicable, then you come to 206C1H. Alright, then let us say the sale price is 100 rupees, okay, and the GST is 10 rupees, total 110. Now, will you collect tax on this 100 or will you collect tax on 110? Let us say in the invoice also proper breakup of TCS is given. So in that case, you will calculate TCS under 206C1H on what amount? On 110. This is a very special point about 206C1H. You always calculate TCS on this amount including GST. So on this amount including GST, on this amount you will calculate TCS. Understanding? Even if breakup is given, see, generally what do we say in TDS and all? In TDS we say if breakup is given, then don't calculate TDS on the GST component. Calculate on the gross amount without considering TDS, right? But in TCS, in 206C1H, you will calculate TCS on the amount including GST always. Okay, then listen to the next condition. 206C1H will apply only if the aggregate sale to that particular buyer, total sale, the aggregate sale to that buyer is more than 50 lakhs. I am the seller. I am selling goods to various buyers. I will collect tax under this section only from those buyers to whom my aggregate sale is more than 50 lakhs. I am not going to collect tax from all the buyers. I will collect tax only from those buyers to whom my total sale was more than 50 lakhs. In such case, on the excess above 50 lakhs, on the excess, I will collect tax at the rate of 0.1%. So the TCS rate is going to be 0.1%. And when am I going to collect tax? I am going to collect tax at the time of receipt of consideration. When I receive the consideration, at that time, I will collect tax. To summarize, guys, 206C1H, you can learn it like this. There are totally 3 conditions. Condition number 1, the seller should be a person whose preceding previous year turnover is more than 10 crores. Condition number 2, no other TDS section should apply, no other TCS section should apply. For this, I will give you a flow chart to check this condition. That flow chart will make life easy for you because this is the only place where students get stuck when it comes to 206C1H. The third condition is that the aggregate sale to that particular buyer should be more than 50 lakhs. If all these conditions are fulfilled, then on the excess above 50 lakhs, we will calculate tax, we will collect tax, we will collect TCS at the rate of 0.1%. It's still clear with 206C1H also. So totally 4 sections I've taught you. 206C1. Here we are talking about atoms. Then we spoke about 206C1A declaration. If this declaration is given no TCS at all, then I taught you about 206C1C where I'm taking some parking, toll plaza, mine or a quarry on lease. Now I have to pay lease rent. Along with lease rent, I'll pay TCS also at the rate of 2%. Then we have 206C1H. Here we said totally 3 conditions. Seller is a person whose preceding previous year turnover is more than 10 crore. No other TDS, no other TCS is applicable, for which we will see a flowchart. And the aggregate sale to that particular buyer is more than 50 lakhs. If all these conditions are fulfilled, on the excess at 0.1%, we will collect tax when? At the time of receipt of consideration. And please remember, for all calculations, you will include even the GST component. You will look at the total amount, including even the GST component. Okay, so this is it about 206C1H. Before I close 206C1H, let me discuss this flow chart with you. This flow chart is something which you can blindly apply in the examination, guys. It is going to make things a lot better for us. See, listen, when we have too many things to remember, okay, always remember this. When you have too many things to learn, too many things to remember, concise it for yourself in one single page in the form of some diagram or in the form of some flowchart. That way the content is very, very limited for our brain to remember. And when I put something in a flowchart, all right, it becomes much easier for our brain to recall later. It's even scientifically proven that for a brain, it's much easier to recall a diagram, to recall a picture, to recall a flowchart than to recall paras and paras. So the most complicated part of 206C1H is grasping about this TDS TCS point. Whatever is difficult, let us simplify it through this flowchart. See, listen, whenever you come to section 206C1H, do not blindly calculate tax. You will see the 3 conditions. First condition, seller should be a person whose preceding previous year turnover should be more than 10 crores. Second condition, no other TDS, no other TCS should apply. So for the second condition, you will apply this flowchart. You will first see, is any other TDS section applicable? If any other TDS section is applicable, see, 206C1H is also for goods, right? You're collecting tax on sale of goods. TDS on goods, you have only 2 sections. Either you have 194O or you have 194Q. So if any other TDS section is applicable, in that case, you forget about 206C1H. If any other TDS section is applicable, 206C1H will not apply. But if TDS is not applicable, then you have a ray of hope. You please check if any other TCS is applicable or not. Now we're talking about goods. So in goods, in TCS, for goods, you have only 2 sections. You either have section 206C1 or you have 206C1F. See, whether TCS is applicable or not, you may have 3 answers. Either 206C1 is applicable, or 206C1F is applicable, or no TCS is applicable. See, if no TCS is applicable, now you can definitely collect tax under 206C1H, not a problem. But if 206C1 is applicable, you know what is 206C1? Here we spoke about atoms. Now, for atoms, 2 things are possible. Listen, either the buyer might have given 206C1A declaration. He has given 206C1A declaration. Now tell me, if he gives 206C1A declaration, will you collect tax? You will not. I said no TCS at all. So if he has given this declaration, then we would not have collected TCS. You cannot collect TCS neither under 206C1 nor under 206C1H. No TCS section at all will apply. If he gives declaration, no TCS at all. No 206C1 also, no 206C1H also, no TCS at all. But guys, if he did not give this declaration, then under 206C1 itself, TCS would have been collected if he did not give declaration. If he did not give declaration, if TCS is already collected, then you cannot come to 206C1H, obviously, because TCS is already collected. Understanding? This is a little confusing. Listen to me. I'll repeat again. If the goods are atoms, then 206C1 would have been applicable. Under 206C1, 2 things are possible. Either the buyer may have given a declaration or the buyer may not have given a declaration. If the buyer has given a declaration, remember the declaration. Declaration what? Declaration saying, I am going to use the goods for manufacturing, for processing. I am not going to resell the goods. I'm not going to trade in the goods. If he has given that sort of a declaration, then no TCS at all. So no TCS at all means what? Neither under 206C1 nor under 206C1, it's no TCS at all. But if he has not given this declaration, it means he's going to resell the goods. He's a trader in these goods. If he's going to resell, if he's a trader in these goods, if he has not given this declaration, then under this section itself, they would have collected tax, guys. If TCS is already collected, then again under 206C1H, you cannot collect tax. So I can say that for atoms, you will not have 206C1H at all. Okay, then we have 206C1F, which talks about motor vehicle. Here, two things are possible. Either tax might have been collected or tax might not have been collected. If tax has been collected already, then obviously 206C1H will not apply. But if tax has not been collected already, then yes, you can collect under 206C1H. See, when is it possible that under 206C1F you did not collect tax? This talks about motor vehicles, right? But if you recall, 206C1F says tax will be collected here only if the sale price per vehicle is more than 10 lakh. So if it's up to 10 lakh, then you would not have collected tax under 206C1F. Or if the buyer is not a retail buyer, you wouldn't have collected under 206C1F. So whatever reason, if it is not collected under 206C1F, then you can think about collecting under 206C1H. So this diagram will make things much easier for you when it comes to the second condition. You will first see if any other TDS applicable. If TDS is applicable, then you forget about 206C1H. If TDS is not applicable, you see if any other TCS is applicable. If it's 206C1, if it is atoms, then either the buyer would have given declaration or the buyer wouldn't have given declaration. Whether if he gave declaration, then no TCS at all under any section, not under 206C1H also. And if he is not given declaration, then we would have already collected tax under this section. So don't collect again under 206C1H. So if it is atoms, then there will be no 206C1H at all. Okay, then if it is 206C1F, it is motor vehicle, then either tax would have been collected or not collected. If it is collected, then no 206C1H. If it is not collected, then yes, you can apply 206C1H. Okay, so this is a flow chart. Please follow this when it comes to the second condition. If first of all you will see any other TDS is applicable, then you will check about TCS applicable. Alright, always remember 206C1H is a subservient section, which means if none other TDS, none other TCS section applies, only then at the end you come to 206C1H. Okay guys, so this was our third or fourth concept under this discussion. Now I want to discuss with you about one more section, which is section 194Q. This is from the TDS perspective. Okay, see, listen, here what happens is the buyer is purchasing goods from the seller. Okay, the buyer, he is going to pay consideration to the seller, right? From the consideration, the buyer will subtract tax, he'll deduct TDS, and he'll remit only the net amount. So the buyer becomes a deductor here. In 206C1H, what do you do? In 206C1H also, here also you have the buyer and you have the seller. Here also the seller is selling goods to the buyer. Here, when the seller is collecting consideration from the buyer, along with the consideration, the seller will collect TCS also. So here 206C1H responsibilities on the seller, 194Q the responsibilities on the buyer. 194Q is same as 206C1H, total ulta, that's all. In 206C1H, responsibilities on the seller to collect tax along with consideration. In 194Q, the responsibilities on the buyer to deduct tax and pay only the balance consideration. Now, when does section 194Q apply? What are the conditions? Let me discuss them with you one by one in full detail so that you're thorough with 194Q by the time we end this discussion. Point number 1. Who is the deductor over here? Remember, 194Q is a TDS section, okay? So, who is the deductor over here? The buyer. The buyer can be any person, guys, individual, HUF, company, LLP, firm, any kind of a buyer, but preceding previous year turnover should be more than 10 crore. Now, what about central government, state government, department and all? Do they also have to deduct tax under 194Q? It depends. Are they having business or commercial activity, or are they not having business or commercial activity? If they're having business or commercial activity, then 194Q is applicable to them also. But if they're not having any business or commercial activity, then no 194Q for them. So point number 1, under 194Q, the deductor should be a buyer whose preceding previous year turnover is more than 10 crore. Then point number 2, who is a deductee over here? From whom are we deducting tax? Obviously from the seller. Okay, then when are we going to deduct tax? At the time of payment or credit, whichever is earlier. In 2061H, we said at the time of receipt of consideration. This is ulta, payment or credit, whichever is earlier. Now listen, even over here, only if the aggregate purchase is more than 50 lakhs, only then on the excess, we deduct tax at the rate of 0.1%. And when do we deduct tax? At the time of payment or credit, whichever is earlier. Now, how to compute this number? Will we include GST or will we not include GST? Depends upon which is earlier. See, it depends upon is payment earlier or is credit earlier. If payment is earlier, then including the GST component, we will calculate. If credit is earlier, then excluding the GST component, we will calculate. Even in 2061H, aggregate more than 50 lakhs. Even over there on the excess at 0.1%. But there at the time of receipt, here at the time of payment or credit, whichever is earlier. If payment is earlier, I will include GST component also. If credit is earlier, I will not include the GST component. Understood, guys? Then talking about some smaller points, in the first year of business, section 194Q will not apply because you don't know preceding previous year turnover. Then in case the transaction is through the stock exchange, even there 194Q will not apply through stock exchange. So this is what I want you to remember under 194Q. Okay. We do have 1 or 2 small points still left. I'll discuss that with you. But till here, be clear first of all, the deductor should be a buyer whose preceding previous year turnover is more than 10 crore. The deductee will be seller. Payment or credit, whichever is earlier, we will deduct tax then. If payment is earlier, including the GST component, we will consider. If credit is earlier, excluding the GST component only, we will consider. On the excess, we will deduct tax at the rate of 0.1%. Now, even over here, no other TDS section should apply, no other TCS section should apply. For example, if let us say section 194O is also applicable and 194Q is also applicable, then you will give priority to 194O. Just like 2061H is subservient, even 194Q is subservient. So both are weaker sections. So you apply other TDS, other TCS, only then you come to these two sections. So if 194O is applicable, you apply that. Come to 194Q at the end only. What if section 206C1 is applicable and 194Q is applicable? You apply 206C1. Any other TCS section is applicable, any other TDS section applicable, you apply that. 194Q and 206C1H both are subservient. But what if 206C1H is also applicable and 194Q is also applicable? Don't get confused. 206C1 is atoms. 206C1H is other goods. What if both the subservient sections are applicable? Then which of the two will you apply? Out of these two subservient sections, 194Q is stronger. 194Q is also weaker. 206C1H is also weaker. Apply other TDS, TCS sections, only then come to these two. No other TDS, TCS section is applicable. So you've come to these two. Out of these two, which of the two will you pick? Out of these two, you will pick 194Q. We're understanding both are weaker sections, but out of these two weaker sections, 194Q is stronger. Alright guys, so even over here, let us conclude 194Q with conditions now. Same 3 conditions I'll put over here also guys. The buyer should be a person whose preceding previous year turnover should be more than 10 crore, condition 1. Condition number 2, no other TDS, no other TCS should apply. Even for this, I will give you a similar flow chart. You can simply follow that. Third condition is that the assessee should be a person. The third condition is that the aggregate sale, the assessee should be a person. Aggregate sale he should have made to that particular aggregate purchase, sorry, the aggregate purchase he should have made from that particular seller more than 50 lakh rupees. The aggregate, I am a buyer. I am buying from many sellers. The sellers from whom I am buying more than 50 lakhs, only their TDS is applicable. So if all these conditions are fulfilled, then on the excess, the buyer will deduct tax at the rate of 0.1%. Okay, when at the time of payment or credit, whichever is earlier. If payment is earlier, we will include GST component also. If credit is earlier, we will not include GST component. Simple 3 conditions. Okay, now let us look at this flow chart. Whenever you come to 194Q, you check first of all whether any other TDS is applicable. If TDS is applicable, then 194Q, forget about it. If TDS is not applicable, then you check is TCS applicable. Two things are possible. Either the answer may be yes or the answer may be no. If TCS is applicable, okay, you see which section under TCS, which section is applicable. See, even here we're talking about goods. TCS, if you see for goods, like how I just told you, 3 sections only we have for goods. 206C1 which talks about atoms, 206C1F which talks about motor vehicles, and 206C1H which talks about other goods. If these 2 sections are applicable, then you see under these 2 sections was TCS collected. If TCS has already been collected under these 2 sections, then under 194Q you cannot deduct tax again. But if TCS is not collected under these 2 sections, 206C1 and 206C1, if TCS is not collected, then yes, under 194Q you can deduct tax. If 206C1H is applicable and 194Q is applicable, then you know you will give priority to 194Q and not to 206C1H, that you already know. If TCS is not applicable, then obviously you can deduct tax under 194Q. So it's simple, guys. If any other TDS is applicable, forget about 194Q. If TDS is not applicable, you see is TCS already collected under these 2 sections. If collected, then you don't apply 194Q because 194Q is weaker. If other TCS section is applicable, then don't apply 194Q. But under other TCS section, if tax is not collected, then you can apply 194Q. If 206C1H and 194Q are applicable, out of these 2 sections, you know you will give priority to 194Q only. Okay, guys. So with this, we are done learning how many sections. We are done learning number 1. The first concept we learned was 206C1. Then we learned about 206C1A declaration. Then we spoke about 206C1C lease and license. Then 206C1H we spoke about. And then finally 194Q. I'll end my revision with 2 sections now, the last 2 sections. One is section 206AA and the other is section 206CC. 206AA applies when, this is applicable to TDS by the way, and this is applicable to TCS. 206AA applies if the deductee is neither giving his PAN nor is he giving his Aadhaar. Okay, in that case, 206AA says, you see what is the applicable rate or 20%, whichever is higher. Okay, 206AA says if the deductee is not giving his PAN or his PAN and his Aadhaar, he's neither giving PAN nor is he giving Aadhaar, then the TDS rate, whichever section you're calculating, the TDS rate will become whatever is the applicable rate or 20%, whichever is higher. But if it is section 194O or if it is section 194Q, if it is these 2 sections, then the TDS rate will be whatever is the rate applicable in these 2 sections or 5%, whichever is higher. 206CC says if the buyer is neither giving his PAN nor is he giving his Aadhaar. Okay, in that case, the TCS rate will change. The TCS rate will be 2 times of whatever is the applicable rate or 5%, whichever is higher. But if you're talking about section 206C1H, here in this case, if the buyer is neither giving PAN nor is giving the Aadhaar, then the TCS rate will be 2 times of the rate of that section or 1%, whichever is higher. So 206AA and 206CC talk about the consequences if you do not give neither your PAN nor your Aadhaar. The rate will, in TDS, it will be rate or 20%, whichever is higher. In these two sections, 194O and 194Q, rate of 5%, whichever is higher. If it is 206CC, then 2 times the rate or 5%, whichever is higher. But if 206C 1H TCS we're talking about, then 2 times the rate or 1%, whichever is higher. So now, after discussing all of these concepts, now the question should be very, very easy for us. One reading, we will handle it. Listen, let us read the question first. As we read the question, we'll keep illustrating the question in the form of a diagram here so that it's easier for us to solve it. All right. Kishore and Sons is a dealer of coal. Its turnover for financial year 21-22 was 12 crores. So we have a person called Kishore and Sons, partnership firm or sole proprietorship firm, we don't know. They've just given us that their turnover for financial year 21-22, their turnover was 12 crores. Okay. Then the state government of Hyderabad granted a lease of coal mine to Kishore and Sons on 1st May 2022 and charged 11 crores for the lease. So we have another person, the state government of Hyderabad. They have given a coal mine to Kishore and Sons on lease. Does any section come to your mind? Lease of coal mine. 206C, 1C. And for this coal mine, Kishore and Sons has given 11 crores to the state government of Hyderabad. When did this happen? On the 1st of May 2022. Lease of coal mine. 4 things I had told you. Lease or license of parking, toll plaza, any mine or quarry. 2% TCS will be collected. Kishore and Sons is paying 11 crores for the lease. So along with this lease, they will pay TCS also. They will pay TCS at the rate of 2%. You know this. TCS at the rate of 2% under which section? Under section 206C1C. Who will collect this TCS? The state government, the person from whom they've taken the mine on lease, that person, the state government of Hyderabad, is going to collect the tax from Kishore and Sons. Kishore and Sons sold coal of 95 lakhs to BAC and Co. So now there is another person, BAC and Co. Kishore and Sons has sold coal to BAC and Co. for how much? For 95 lakhs. When did this happen? During 22-23. They haven't given us dates. So across 22-23, BAC and Co. has paid 95 lakhs for coal. Then we have one more entity, XYZ Limited. XYZ Limited purchased coal of 55 lakhs from Kishore and Sons. So we have one more entity. Let us say, what is the name? XYZ and Co. To XYZ and Co. also Kishore and Sons has sold coal for how much? This is for 55 lakh rupees. And when did this happen? This happened in July 2022. The question says for trading purpose. So XYZ Limited purchased coal of 55 lakhs for from Kishore and Sons for trading purposes. So this indicates XYZ and Co. is a trader. They're going to resell the coal. Okay. Turnover of XYZ Private Limited in 21-22 was 12 crores. So even XYZ and Co. financial year 21-22 turnover, even here the turnover was the same, 12 crores. Then what else? PAN is duly furnished by buyer and seller. Good. They've given us PAN. Hence, what we discussed over here, 206AA and 206CC will not apply. PAN and Aadhaar and all they have given. Then details of sale to and payments from BAC and Co. are as follows. Remember, we had discussed that Kishore and Sons has sold coal worth 95 lakhs to BAC and Co. But the dates we did not have. That when did this transaction happen? So we don't have any specific date. This sale has happened across the year. So they have given us the breakup of that 95 lakhs. That 95 lakhs breakup they have given. When did the sale happen? When did we receive the payment and for what amount? Total, if you add up and see, it's going to be 95 lakhs. Then turnover of BAC and Co during 21-22 was 11 crores. So they have given us BAC's turnover also for financial year 21-22. Their turnover was how much? Their turnover was 11 crores. Okay. Then the above amounts were credited to Kishore and Sons account in the books of Messrs BAC and Co. Messrs BAC and Co furnishes a declaration to Kishore and Sons that the coal is to be utilized for generation of power. What is this, guys? BAC and Co is is giving a declaration to Kishore and Sons that they're going to be using this coal for generation of power. Does something come to your mind? The buyer, BAC & Co is a buyer, Kishore and Sons is a seller. Guys, we'll go slowly. Listen. Kishore and Sons is a seller, BAC & Co is a buyer. The buyer is giving a declaration to the seller saying, I am going to use the goods for generation of power. I am not reselling the goods. I am not trading in the goods. He is giving a declaration, I am not a trader, I am not a reseller, which means what? No TCS at all. On this transaction between Kishore and Sons and BAC & Co, no TCS at all, right? This is section 206C1A declaration, guys. See, it is coal. First of all, coal comes under atoms. M for minerals. Minerals like iron ore, lignite, coal. So actually 206C1 will apply. Applying 206C1, who will collect tax? Applying 206C1, Kishore and Sons will collect tax under 206C1. For minerals and all, 1% they will collect tax. But then here Kishore and Sons will not collect tax at all, neither under 206C1 nor under 206C1H. From BAC & Co, they will not collect tax at all because BAC & Co has given declaration. Are you able to recall our discussion, guys? I had discussed this with you over here. Where did it go? Here, I had discussed this with you over here. If the buyer is giving a declaration that I'm going to use the goods for generation of power, no TCS at all, right? So the buyer has given a 206C1A declaration. Because the buyer has given 206C1A declaration, but in this transaction, there will be no TCS at all, neither under 206C1 nor under 206C1H, no TCS at all. Okay, so this is the entire story. Now let us look at the questions one by one. Who is required to deduct or collect tax at source in respect of lease of coal mine by the state government of Hyderabad to Kishore and Sons, and at what rate? We've already discussed this. They're talking about the lease of coal mine. For lease of coal mine, we've already discussed that the state government of Hyderabad is going to be the collector. They are going to collect tax from Kishore and Sons under 206C1C at the rate of 2%. So let us see the options. State government of Hyderabad is liable to collect tax at source at 2% on 11 crores. Perfect, guys. Option A, 206C1C will apply. A lease or license of parking lot, toll plaza, mine or quarry, 2% TCS will be collected. First question, simple. Second question, if Kishore and Sons required to collect tax at source in respect of sale transactions with BAC & Co, then they're asking us if yes, when and what is the amount of tax to be collected. They're asking us about this transaction, right? They're asking us about Kishore and Sons and BAC & Co. Now, in this transaction, we've already discussed that in this transaction, there will be no TCS at all because BAC & Co has given a declaration that I am not going to resell the goods. I'm not going to trade in the goods. I'm going to use the goods for generation of power. So, no TCS at all. So, no, Kishore and Sons is not liable to collect any tax at source. Even this we have discussed. No TCS. Why? Because you know very well, if there is 206C1A declaration, then no TCS at all. Okay, then coming to the next point, is Kishore and Sons required to collect tax at source? Again, about TCS they are asking us in respect of the sale transaction with XYZ and Limited. So this question is about Kishore and Sons and XYZ and Limited. Here is TCS required or not? Between Kishore and Sons and XYZ and Co, here is TCS required or not? Listen, TCS is always from whose perspective, guys? From the seller's perspective. So this transaction, if you see, Kishore and Sons has sold coal to XYZ and Co. So you're going to think about the seller. Now it is coal. So which section will you think about? Coal, minerals. M for minerals, atoms. 206C1. 206C1, we have some conditions. What are the conditions? Tell me. But you understood why I'm talking about 206C1. I'm talking about section 206C1. Why? Because reason number one, the goods over here are coal and coal is covered by 206C1. Hence, I can't talk about 206C1H because some other TCS section is applicable. You know very well, right? If some other TCS section is applicable, you can't apply 206C1H because 206C1H is bigger section. And we're not talking about TDS and all. Question itself is asking us only about TCS. So we will talk about 2061. But under 2061, we will not blindly calculate tax. We will apply the conditions. What was the first condition? The seller, if individual or HUF, then the preceding previous year turnover should be more than 1 crore, or the seller should be any other person. Here the seller is Kishore and Sons. We don't know whether they are individual, HUF, partnership firm, LLP. We don't know what they are. But whatever they are, their turnover is 12 crores. So preceding previous year turnover is more than 1 crore. Whatever they are, this condition is fulfilled. Then what is the second condition, guys? The goods should be atoms. Is this condition fulfilled? Yes. M for minerals. Minerals includes coal also. Even this condition is fulfilled. And third condition, there should not be 2061A declaration should not be there. Even this condition is fulfilled. How do I say that? Because XYZ and Co is a trader. They're going to resell the goods. They are not using the goods for manufacturing, processing, power generation and all. They are a trader. They're going to resell the goods. They're going to resell. They can't give declaration. When do you give declaration? If you're going to use for manufacturing, processing, and you're not going to resell, then you give a declaration. But here the question clearly says they are traders, which means they are not going to use the goods for manufacturing, processing and all. They're going to resell. So they cannot give declaration. All three conditions are fulfilled, guys. Therefore, 2061 TCS will be applicable. Now, under 2061, how will we calculate tax, guys? What is the rate? You remember the rate for tendu leaves, it was 5%. For timber and other forest produce, it was 2.5%. Everything else 1%. This is minerals, everything else. So the TCS rate is going to be 1%. 1% of what? Total sale is 55 lakhs. So 1% of 55 lakhs, this is going to be how much? 55,000. So yes, there will be TCS. There will be TCS under 2061. How much? 1% of 55 lakhs, 55,000. I hope you're able to handle this, guys. Got it? So this was subdivision 3. Now come to subdivision 4. This is going to be the most interesting discussion. Messrs. BAC and Co. required to deduct tax at source in respect of the purchase transactions with Kishore and Sons. If yes, when and what is the amount of tax to be deducted? They are talking about this transaction between BAC and Co. and Kishore and Sons. We have concluded already that there is no TCS. Now they are asking us, will there be TDS or not? Okay, now TDS is from whose perspective, guys? See, TCS is from the seller's perspective. Seller will collect the tax. TDS is from the buyer's perspective, BAC and Co. Now, TDS on goods, only two sections we have, 194O and 194Q. See, 194O will not apply here because I'm not talking about e-commerce and all. So, at the maximum, we can think about 194Q. But I told you, we can't straight away apply 194Q. We have some conditions. Tell me, are the conditions fulfilled? What was the first condition, guys? The first condition was that the buyer should be a person whose preceding previous year turnover should be more than 10 crore. The buyer is BAC and Co. Preceding previous year turnover is 11 crore, more than 10 crore. Condition 1 fulfilled? Fulfilled. What was the second condition? Second condition was that no other TDS should apply, no other TCS should apply. Think about the flow chart. Is any other TDS applicable? No, 194O is not applicable. Then when we come to right side, is any other TCS applicable? See, we have clearly concluded over here no TCS. Why? Because 2061A declaration was there. If there is 2061A declaration, no TCS at all. So, no TCS also. So, no TDS, no TCS. Both the conditions are fulfilled. Yes, and third condition, the aggregate sale between the seller and the buyer, the aggregate sale, the aggregate purchase that the buyer has made from the seller should be more than 50 lakhs. What about this condition, guys? The aggregate sale which BAC and Co, the aggregate purchase which BAC and Co has made from Kishore and Sons is 95 lakhs, which is more than 50 lakhs. So all the three conditions are fulfilled. Therefore, I can say that yes, 194Q is applicable. So is BAC and Co required to deduct tax? Yes, the buyer will deduct tax under 194Q. But how much and when? Listen, I told you that we will deduct tax at source at the time of payment or credit, whichever is earlier. If payment is earlier, I will include the GST component also. If credit is earlier, I will not include the GST component. Here the question doesn't talk anything about GST, so even we will forget about GST. Okay, for BAC and Co, they have given us breakup of the transactions. Each of the transactions we'll see which is earlier, payment or credit. For the first transaction, if you see, payment is earlier. Second transaction, if you see, credit is earlier. Third transaction, if you see, payment is earlier. Fourth transaction, credit is earlier. And the last transaction, payment is earlier. So you look at the first transaction is only rupees 35 lakhs. Only 35 lakhs. It is less than or equal to 50 lakhs. Therefore, here there will be no TDS, guys, because only if it crosses 50 lakhs. But the second transaction total would have become 60 lakhs. Total 60 lakhs, 35 plus 25, 60 lakhs. Now it has crossed 50 lakhs. So now there will be TDS, guys. TDS at what rate? 0.1% of what? Of the excess. So 35 lakhs plus 25 lakhs, 60 lakhs. What is the excess over and above 50 lakhs? 10 lakhs. On that 10 lakhs, 0.1%, that's going to be 1000 rupees. So 1000 is going to be deducted on 30th June 2022. 1000 rupees is going to be deducted on 30th June 2022. Then what else? Second, see, now it has crossed 50 lakhs. So on all the transactions, TDS will apply. So 8 lakhs into 0.1%, how much will this be? This is going to be 800 rupees. 800 rupees is going to be deducted on 25th October 2022. Then 15 lakhs into 0.1%, this is going to be 1500. So 1500 is going to be deducted on 20th Jan 2023. And finally, 12 lakh into 10%, 1200. This is going to be deducted on 15th February 2023. So see which of the options is correct. 1000. See, first of all, option B and option D are wrong. These two are definitely wrong because we are deducting first 1000 rupees. Now this first 1000 rupees, when are we deducting? On 30th June 2022. So 30th June 2022, 1000 or 10th July 2022, 1000. Even this is wrong. So it's going to be option A. Fourth question, option A. This was simple. This was simple, guys. If you see 194Q and 2061H, if you learn it this way, like how I've discussed it with you, it's extremely simple, very, very attainable. Nothing complicated, right? So when I'm going to be when I talk about Kishore and Sons and BAC and Co, no TCS at all. So if no TCS, then from the buyer's perspective, BAC and Co can deduct tax at source under 194Q. TDS is always from the buyer's perspective. TCS is always from the seller's perspective. Total purchase which BAC and Co has made from Kishore and Sons is 95 lakhs, more than 50 lakhs. So on the excess at 0.1%, there will be TDS. That's it about the fourth subdivision. Then fifth subdivision, assume for the purpose of this MCQ, Messrs. BAC and Co's turnover for 21-22 was 9 crores. What if BAC and Co, they turnover instead of 11 crores, what if it was 9 crores? If it is 9 crore, then even 194Q will not apply. Right? If it is 9 crore, if it is within 10 crore, preceding previous year turnover is within 10 crore, so even 194Q will not apply. Who will be required to deduct or collect tax? TDS or TCS in respect of transactions between Kishore and Sons and BAC and Co, and at what rate? What if BAC and Co's preceding previous year turnover was 9 crore? Then how much TDS, how much TCS, what will happen? See, no TCS we have anyways concluded. So TCS will anyways not apply because 2061A declaration is there. So no TCS at all. Only thing we are left with is TDS. Under TDS, only two sections are possible for goods, 194O or 194Q. 194O is not applicable because there is no e-commerce. 194Q will also not be applicable because preceding previous year turnover of the buyer is less than 10 crore. So no TDS, no TCS, nothing. Neither Kishore and Sons is liable to collect tax, nor BAC and Co is liable to deduct tax. You're understanding? So there'll be no TDS, no TCS at all. A very good question. The discussion that we've had, the revision of the provisions, and this entire question should give you now 100% clarity of 206C1H, 206C1, and 194Q. Now you should be getting the sort of confidence that any question they ask us in the examination, we will be able to handle. Crystal clear, guys? Yes, we'll close this question. We'll go to the next question. Come on, let us go to question number 6 now. With question number 5, the case study based MCQ is over. Now we're discussing the remaining MCQs one by one. The 6th question talks about a specific point. Let me discuss the concept with you first. See, in IFHP, we know that we can have two types of properties, guys. Either we can have self-occupied properties or let-out properties. In IFHP, we have deduction under section 24. One of the deductions is interest on borrowed capital. For self-occupied property, when I talk about interest on borrowed capital, we have two limits. Number one, we have 2 lakh limit. Number two, we have 30,000 limit. We have 2 lakh limit if some conditions and all are fulfilled. Loan should be borrowed on or after 1st April 1999. Loan should be borrowed for purchase or construction. The purchase or construction should be completed within 5 years from the end of the year in which loan was borrowed. So if all those conditions are fulfilled, 2 lakh, otherwise 3 lakhs. But for let-out property, there is no limit at all, right? You also know that there is one more section 115 BAC, which is alternative method of taxation. Now, under 115 BAC, you get lower tax rates, but you're supposed to give up some benefits. If you want 115 BAC, then listen, let-out property will not be affected at all. But if it is a self-occupied property, then for interest, you have to forget about deduction, no deduction under section 24. Okay, so this is a concept which you need to know to answer the 6th question. If it is a let-out property under 115 BAC, there will be no change at all. But if it is a self-occupied property, then under 115 BAC, you don't get any deduction under section 24 for self-occupied property. Okay, with this knowledge, come to question number 6. Mr. Virat has a property in Chennai which he let out to Mr. Sumit. So Mr. Virat is the landlord, he is the owner of the property, and Mr. Sumit is a tenant. To him the property has been let out. For acquisition of this house, Mr. Virat has taken a loan of 30 lakhs at 10% per annum long ago on 1st April 2016. So first of all, we have a loan of 3 lakh at 10% 1st April 2016. He further took a loan, guys, is one more loan of 5 lakhs at 12% per annum on 1st July 2022. This is towards repair. See, there are totally 2 loans. He has taken one loan for the acquisition of the property, 30 lakhs loan. Let me call this loan number 1. He has taken one more loan of 5 lakh rupees. This is for repairs. He has not repaid any amount so far. What is the amount of interest deduction under section 24B to Mr. Virat for assessment year 23-24 if he opted for the provisions of 115 BAC? See guys, he is opting for 115 BAC, which means if it is a self-occupied property, then no interest deduction. But guys, here, is it self-occupied property? No, he has given the property on rent. It is a let-out property. So here it is a let-out property. Let-out property, I told you 115 BAC, no change, guys. So as usual, you will calculate no limit. Without any limit, you will calculate the interest. How much interests will he pay? 2 interests he'll be paying. For the first loan, for this 30 lakhs loan, 30 lakh into 10% he'll be paying. Nothing has been repaid, they are saying. So here we will have 3 lakhs. Then for the second loan, 5 lakhs into 12%, but the loan is taken only during the year, only on 1st July. So 9 months. So 5 lakhs into 12% into 9 by 12, this is going to be 45,000. So total interest 3,45,000. Let out property, you can claim interest as a deduction without any limit. Full 3,45,000 you can claim as a deduction. Even though assessee is following 115 BAC, no change for let out property. Crystal clear, simple case. This was an easy question. This was a combination of IFHP and section 115 BAC. Okay, let us come to question number 7 now. Question number 7 talks about Another point, which is also an amendment applicable for the first time for your examination. By the way, guys, all the amendments applicable for CA, Inter, Income Tax, and Law have been uploaded on my YouTube channel. So if you haven't watched them until now, you can watch them, all right, on the same channel. You will find them explained in a detailed manner. All right, so you'll get very good clarity on the amendments. So if you have watched the amendment sessions, one of the amendments, the first amendments video, you must have seen that generally we know that section 111A STCG, dividend income, section 112A LTCG. For these three, what is the maximum surcharge rate? 15%. The same maximum surcharge rate which is applicable to them is now also applicable to 112 LTCG. So I can say that all LTCG, whether 112, whether 112, will also come under the maximum surcharge rate of 15%. Okay, so this is all what is being tested in the 7th question. Let us discuss this. Mr. Rishabh, age 65 years, resident in India. Guys, see, individual, resident, at least 60 years. I can call Mr. Rishabh as a senior citizen. Just because 60 don't conclude. Resident, individual, at least 60 years. He has total income of 4 crore 50 lakhs. Comprising LTCG under 112. So he has LTCG under section 112, how much? 85 lakhs. Then he has LTCG under 112A. He has LTCG under section 112A. How much? 75 lakhs. Then he has other income of 2 crore 90 lakhs. Other income of 2 crore 90 lakhs. So total income of Mr. Rishabh is 4 crore 50 lakhs. No chapter 6A and all. So this is GTI also, total income also. What are they asking us? What would be the tax liability for assessment year 23-24? Assuming Mr. Rishabh has opted for 115 BAC, guys, with 115 BAC, they're asking us to calculate his tax liability. Shall we begin? Let's get to work. With 115 BAC, we have to calculate his tax liability, applying 115 BAC. But guys, in 115 BAC, if he's a senior citizen, will that make a difference to us? No. 115 BAC, whether you're a senior citizen, whether you're not a senior citizen, it will not make any change. 115 BAC basic exemption limit will not change with your status of senior citizen, super senior citizen and all. Same basic exemption limit, only 2,50,000 for all assessees, even if you're senior citizen. Okay, but listen, 115 BAC will not apply to special rate incomes. To special rate incomes, you will calculate normal usual tax only. So see, LTCG under section 112, what will be the tax rate? 85 lakhs into 20%, right? So that's going to be how much? 17 lakhs. 17 lakhs. Then what about LTCG under section 112A? Don't forget, we get 1 lakh exemption. So did we do a mistake? Should we have considered 1 lakh exemption here? No. You know very well, section 112A LTCG 1 lakh exemption we consider only when we come to the tax computation part. Only there we talk about the 1 lakh exemption. So 75 lakhs is the LTCG. From this, I will give 1 lakh exemption. On the balance at 10%, that's going to be 74 lakhs into 10%, 7,40,000. Okay, then coming to the balance income, what is our balance income, guys? 2 crore 90 lakhs. On this 2 crore 90 lakhs, we have to calculate tax. Here 115 BAC we will bring into the picture. Even though my assessee is a senior citizen, still my assessee will not have any higher basic exemption limit under 115 BAC. How will you calculate here? Up to 2,50,000, 0. 2,50,000 to 5 lakhs. On this 2,50,000 at 5%, 12,500. 5 lakh to 7,50,000. On this 2,50,000 at 10%, 25,000. 7,50,000 to 10 lakh. On this 2,50,000 at 15%, that's going to be 37,500. Then 10 lakh to 12,50,000. On this 2,50,000 at 20%, 50,000. Then 12,50,000 to 15 lakhs. On this 2,50,000 at 25%, that's going to be 62,500. Then on the balance above 15 lakhs, how much do we have above 50 lakhs? 2 crore 90 lakhs minus 15 lakhs. How much above 50 lakhs do we have? 2 crore 75 lakhs. On this at 30%, that's going to be 82 lakhs and 50,000. So what is our total tax? 12,500, 25,000, 37,500, 50,000, 62,500 plus 82 lakh 50,000. This is going to be 84,37,500. 84,37,500. So the total basic tax of our assessee is going to be 84,37,500 plus 7,40,000 plus 17 lakhs, which is going to be 1 crore 8,77,500. This is only the basic tax number. Okay, now after this, what do we always consider? Rebate under section 87A. Obviously, we will not have any rebate because total income is much more than 5 lakhs. Then we add surcharge. We will have surcharge over here at what rate? Listen, we have various sequences, right, for surcharge. You can see those sequences in the amendments video also. I would have explained what is the sequence, how are you supposed to think about surcharge. You can have a look there as well. See, this question falls under the situation where total income minus dividend income minus 111A FTCG minus all LTCG, the balance is more than 2 crore up to 5 crore. Don't you think it falls under this bucket? Because see, the balance income was 2 crore 90 lakhs. The balance income after excluding these incomes is more than 2 crore up to 5 crore. It is 2 crore 90 lakhs. So in this bucket, what do? On this income, whatever tax you have, on that tax, 25% surcharge. On these incomes, whatever tax you have, on those taxes, 15% will be surcharge, because you know dividend income, 111A FTCG and all LTCG, maximum surcharge is how much? 15%. So on these two numbers, 17 lakh plus 7 lakh 40,000, on 24 lakh 40,000, your maximum surcharge will be 15% only, which is going to be 3 lakh 66,000. But on this tax, on the tax on other income is more than 2 crore up to 5 crores. So on the tax on other income, you will have 25% surcharge, which is going to be 21 lakh 9,375. So total surcharge is going to be 24 lakh 75,375. You can calculate and see there will be no marginal relief over here. So the total tax as of now comes up to 1 crore 33 lakh 52,875, and then you will add cess at 4%. After adding cess, it's going to be 1 crore 38 lakh 86,990. So which option will it be? This one, 1 crore 38 lakh 86,990. Option B. The only thing that this question is testing us is whether we are aware of the amendment. Even section 112 LTCG, even here maximum surcharge rate is now 15%. Okay, so on these two tax numbers, we calculated 15%. On the balance tax number, we calculated at 25%. Why? Because the balance income is more than 2 crore up to 5 crore. So our situation is this one where total income minus these three incomes, balance is more than 2 crore up to 5 crore. So on this balance income, whatever tax we have, on that 25% will be the surcharge rate. On these incomes, maximum 15% will be the surcharge rate. All right, so that is it about this question also. This was question number 7. All right, shall we go to question number 8 now? Question number 8 is a very interesting question, guys. A lot of things we will get to learn and revise through this question. Listen, let us handle this. Let us read this first. We'll go step by step. As we read it, we will do our calculations. Mr. A is engaged in the retail trading of toys. He acquired a motor vehicle A for 4 lakhs. So first of all, he has motor vehicle A for 4 lakhs. When did he acquire it? On 20 August 2020. So he acquired it in previous year 2021. 2021 it will enter the block. But it was put to use only on 4th October 2021. It was put to use only in 21-22. See, in cases like this, in 2021 it will enter the block. Okay, but only 21-22 onwards you will start claiming depreciation, because you know very well that you claim depreciation only after you put the asset to use. It was put to use in 21-22, and therefore you will claim depreciation only 21-22 onwards. But because it was acquired in 2021, it will enter the block in 2021. Then we purchased another motor vehicle B for 3 lakhs. This was purchased on 19th February 2021. This was purchased in previous year 2021 again. And again this was put to use when? On 3rd September 2021. It was put to use in 21-22 again. On 1st April 2021, Mr. A took a vehicle loan of 5 lakhs at 10% per annum. So when did he take the loan? On 1st April 2021. How much loan? 5 lakhs at 10% per annum. He acquired motor vehicle C, another motor vehicle, so third vehicle. He is acquiring motor vehicle C for 5 lakhs on 31st May 2021. This is going to be previous year 21-22. He put it to use on 30th June 2021. He put it to use in the same year 21-22 itself. On 30th July 2022, the same vehicle C was sold. So which vehicle are we selling, guys? We are selling away vehicle C for 5.5 lakhs on 30th July 2022. And it was reacquired on 28th August 2022 for 6 lakh rupees. So we sold vehicle C and then we repurchased. Sale and repurchase concept is applicable here. Assuming the above mentioned assets are the only assets in the block, what would be the total depreciation for previous year 22-23? Okay, now listen. You are aware that if I acquired the asset and if I put the asset to use in this period, I get a higher depreciation rate for cars, guys. Instead of 15%, I get 30%. But if you look at this entire question, this period is not involved at all. So that is why we are going to ignore this period. Okay. You also know that for motor vehicles, for road transport vehicles, you do not apply additional depreciation. So even additional depreciation concept we are going to ignore. We'll start from the very beginning and we will calculate the block numbers. First of all, they are starting off with which year? They are starting with 2021. So opening WDV on 1st April 2020 is how much? 0. Because first time we are buying the vehicle only on 20 August 2020. So in the beginning of the year, the opening WDV is 0. Then what do? You add actual cost of assets acquired. Right? Now, did you acquire any asset during 2021? Yes. We acquired motor vehicle A. Even motor vehicle A we acquired in 2021. Even motor vehicle B we acquired in 2021. No doubt both the vehicles we did not put to use in the current year. Current year means I'm talking about 2021 first. In this year we did not put them to use. We are putting them to use only in 21-22. But it was acquired in 2021. It will enter the block. Okay, I will not claim depreciation, but it was acquired, so it will enter the block. I have motor vehicle A, motor vehicle B. Motor vehicle A was acquired for 4 lakhs. Motor vehicle B was acquired for 3 lakhs. Okay, for both of these, I will not calculate any depreciation at all because it was not at all put to use during the current year. Then what do you subtract? You subtract monies payable for assets sold. In 2021, you haven't sold any asset. So what is the closing WDV on 31st March 2021? We have 7 lakhs. From this, generally, we calculate depreciation, but here we will not have any depreciation because we did not even put the cars to use. So guys, what will be the opening WDV on 1st April 2021? 7 lakhs. Okay, in 21-22, our next year, in 21-22 only, we have started using both the cars. So in the next year, we will get depreciation. Okay, so opening WDV we have. Then what comes next? Add actual cost of assets acquired. Did we acquire any asset during the year? During the year as in 21-22, did we purchase any asset? Yes. On 1st April 2021, we took a loan and then we acquired motor vehicle C on 31st May 2021. So in 21-22, in this year, yes, we have purchased a vehicle. We have purchased vehicle C. But you must be aware of this concept that when I purchase a vehicle, and for that vehicle, if I borrow a loan, then till I put that vehicle to use, till then, whatever interest I have incurred on that loan will be added to the actual cost, guys. See, when did we borrow the loan? We borrowed the loan for vehicle C on 1st April 2021. Okay, when did we put the vehicle to use? It was put to use on 30th June 2021. So totally how many months? April, May, June. For 3 months, whatever interest has been incurred, even the interest will be added to the actual cost. Now, what is the value of the loan? 5 lakhs loan, 10% interest. So 5 lakhs loan, 10% interest into 3 by 12. This is going to be how much? 12,500. This 12,500 I will add to the actual cost. The cost of the vehicle is 5 lakhs. So 5 lakhs plus 12,500. So 5 lakh 12,500. This will be the cost that will enter the block. Then what do you subtract, guys? As usual, less money is payable for assets sold. Have we sold any assets in this year? Let us see what does the question say. We did sell vehicle C, but when are we selling vehicle C? Only on 30th July 2022. In this year, in 21-22, we haven't sold any vehicle. So what is our closing WDV now? 7 lakh plus 5 lakh 12,500. This will be 12 lakh 12,500. This is on 31st March 2022. Okay. Now will I get depreciation? Listen carefully. Motor car A and B and C, all the three I'm putting to use in the current year. But A and B were purchased in the earlier year. Listen, in the year of acquisition, in this year, if I put the asset to use for less than 180 days, I get half year's depreciation. In the year of acquisition, if I put it to use for at least 180 days, I get full year's depreciation. If I did not put it to use, I get no depreciation. In subsequent years, I do not look at 180 days, right? Subsequent years, I do not look at 180 days. If I put the asset to use for even 1 day, I will get full year's depreciation. If I did not use the asset at all, then I will get no depreciation. If you look at motor vehicle A and motor vehicle B, don't you think for these two vehicles, 21-22 is a subsequent year, guys? Because what was the year of acquisition for them? For both of them, the year of acquisition was 2021. Both the vehicles were acquired in 2021. So had I put them to use in 2021, I would have checked about 180 days. But here, when did I acquire? Here I acquired in 2021, but I'm putting to use only in 21-22. So subsequent year, my 21-22 here, this is a subsequent year. So subsequent year, I will not bother 180 days. At least few days put to use enough. I will get full year's depreciation. So for A and B, I will get full year depreciation. What about C? C was acquired in 21-22 only. C was put to use on 30th June 2021. So C was put to use in this year only. C was acquired in this year, also put to use in the same year. So in the year of acquisition, it is put to use. It is put to use for at least 180 days. How at least 180 days? It is put to use on 30th June 2021, guys. Calculate and see, it will be at least 180 days. At least 180 days. Therefore, even for C, you will get full year's depreciation. So we already concluded for A and B, I will get full year depreciation because this is subsequent year. And for C also, I will give full year depreciation because for C, it is a year of acquisition, but it is put to use for at least 180 days. For A and B, I will not look at 180 days. You understood why? Because for A and B, this is a subsequent year. In subsequent year, we do not look at 180 days. So for A and B, this is subsequent year, I will give full year depreciation. For C, this is the year of acquisition, but it is put to use for at least 180 days. So even for A, even for C, I will give full year depreciation. So which means for all the three, I will give full year depreciation. So what will be the depreciation then? Less depreciation. How will I calculate 12,12,500 into 15%? That is going to be 1,81,875. So our opening WDV for 1st April 2022 will become 10,30,625. Okay, then same drama, guys. Add actual cost of assets acquired. Did we acquire any assets? Now look at what has happened in 22-23. On 30th July 2022, vehicle C was sold for 5.5 lakhs. So which means we have monies payable 5,50,000, and it was reacquired on 28 August 2022 for 6 lakhs. It was sold and then it was repurchased. Guys, when it is sold and repurchased, what will the actual cost be? Listen to me, there is a special situation. If I sold and then if I repurchased the asset, then there is a special situation which says that in such cases, the actual cost will be whatever is the repurchase price. For how much ever I repurchased, we repurchased it for 6 lakhs, this, or whatever is the WDV upon sale. When I sold the asset at that time, what was the WDV? See, we sold it on 30th July 2022. On this date, what was the WDV? The cost of the car is 5,12,500. We know 5,12,500 is what we had entered the block. On this 5,12,500, we have already claimed 15% depreciation. So what was the WDV before sale, guys? Before sale, the WDV was 4,35,625. So this number or the repurchase price, whichever is lesser, that will be the actual cost. See, we are repurchasing, we are selling and we are repurchasing. A special situation, when we sell and repurchase, don't straight away put this as actual cost of assets acquired. See, we sold for 5.5. This will become monies payable, no confusion. Right? This 5.5 lakhs will become monies payable. But for how much are we repurchasing? What is the actual cost of assets acquired? We are acquiring asset C. In fact, we are reacquiring asset C. We are reacquiring it for 6 lakhs. But we will not take 6 lakhs as it is. We will compare 6 lakhs with what is the WDV before sale. So before sale, WDV was 4,35,625 because before sale only 1 year depreciation we have claimed, 15% depreciation only we have claimed. So 435,625 or 6 lakhs, which is lesser, guys, 435,625. This is going to be the actual cost of assets acquired. Even though in reality it is how much? 6 lakhs or something around 6 lakhs, even though actually we are acquiring it for 6 lakhs, but I will compare that with the WDV before sale. Out of those two numbers, we will pick whichever is lesser. That will become the actual cost of assets acquired. This is the most important concept that we are learning through this question. This is a very good depreciation question, guys. What are the concepts that we have touched upon here? Number one, only if the asset is put to use for at least 180 days, I give full year's depreciation. If less than 180 days, I give half year's depreciation. But all this drama, I think about only in the year of acquisition. Subsequent years, even if I put the asset to use for 1 day, I will still get full year's depreciation. First concept. Second concept, if I borrowed a loan to purchase an asset, then till I put the asset to use, whatever interest I incur on that loan will be added to the actual cost. Third concept, when I sell and repurchase the asset, the selling price will become monies payable, but when I repurchase, it will enter the block. It will re-enter the block at what price? The repurchase price or whatever is the WDV at the time of sale, whichever is lesser. Okay, so guys, now what is the closing WDV on 31st March 2023? The closing WDV will be 10,36,25 plus 435,625 minus 5,50,000, 9,16,250. On this, we will calculate depreciation. 9,16,250 into 15%. That is going to be how much? That is going to be 1,37,438. 437.5, let us say. All right, this is what they were asking us. They were asking us what is depreciation for 22-23. Third year that we are calculating is 22-23, right? If you look at the question, they are asking us what is depreciation for 22-23. How much should we calculate? 137,438. 137,438, option C. This is going to be the depreciation. Got it? The last question was a very good question. The first question and the last question. The first question about TDS, TCS, and this last question about depreciation, both amazing questions. All right, guys. So with this, I think we have come to an end to all the MCQs, TDS, TCS, 115 BAC, and this depreciation question. I'm sure you've understood them all, but if you still have any doubts, you can always WhatsApp me. You will find my number. You'll find my contact details in the description box below. You can contact me and you can get your doubts clarified. All right. I'll put up the other video explaining the descriptive questions also. We'll be solving the descriptive questions. We will do that also. I'll upload that as well in a day or two. All right, guys. I'll see you soon with the second video. Bye-bye.